Hey everybody, Jeff Yastine here with Mike Carr, and we're talking about the importance and reasons why it's good to follow and think about seasonal trends. And that's something, when you think about seasonal trends, it's sort of like, well, you kind of know what it is, but then on the other hand, how do you make something like seasonal trends work in the stock market?
So Jeff, if we think about seasonal trends, a lot of our lives are dictated by seasonality, whether we want to believe it or not. We're recording here the end of September, and pretty soon we're all going to be out buying batteries because it's the time of year to buy batteries.
For
Daylight
toys,
savings
flashlights,
time, your smoke detectors. You're going to run around and change all the batteries in your smoke detectors. Then you're going to stock up for Christmas. These trends show up in the stock market, and that's just one example, of course. But we buy batteries at the same time every year, and we do other things.
So in that case, like just taking it as an example, so then how would you act on something like that when you identify a trend like battery buying, or for that matter, toy buying, or those sorts of things that seem obvious? Christmas and the end of the year, holidays are coming up, people are buying toys and what have. I mean, it seems like too obvious and too predictable to somehow work in the stock market, where we think it's as soon as you got something figured out, it's gonna somehow change. It can't be too easy, or it just can't work.
You're correct, and the Nobel Prize-winning economist Robert Shiller recently addressed that, and he was asked, why do these things work in the stock market even though they're irrational? And his answer was, because we are irrational. We like to believe we're economic beings. We can discount the future, we can figure out what the right price of something is. I can't do that. The reality is none of us do that. We're humans, we're irrational, so these anomalies exist in the market year after year.
Is this something that just an ordinary Banyan Hill subscriber, somebody who's watching this, can they just take that like, oh, okay, I get it, boom, fine, I buy t-shirts in spring, knowing it's, I don't know, the summertime, or what have, or do they need help to really figure out where the cycle is, or if maybe a certain point the cycle's disappeared for a time for some reason?
You're correct. We can figure this out. For example, we're going to go buy batteries. Well, it's too late to buy battery makers at that point, so put it away for next year. Except we don't understand how battery manufacturers actually do their job. So I think it's best to quantify the cycles through quantitative testing rather than try to back it out. Some retailers will stock up for Christmas, for example, early in the year, and others will do it later in the season. So each one is going to have its own rhythm to it.
Talk a little bit, you mentioned quantitative testing. Talk a little bit about what that is for somebody who's not a trader, somebody who's not into the stock market as deeply as we might be.
Right.
What is quantitative trading, and how is that different from just reading about stuff in the Wall Street Journal perhaps, or watching what we're doing online and just sort of taking and acting on it?
And the Wall Street Journal is a great example because you have reporters on deadline. So they're just looking for a data point, writing a story on deadline, and moving on. They've created all of these data series for us. So quantitative testing looks back through the numbers over the years, finds out what is real, what is a statistical aberration. So there's quite a bit of analysis of the data. And we spot these anomalies, we spot these trends, and we can benefit from them year after year.
So doing all that quantitative testing, the seasonal cycles, has it been proven that it works?
It has been. This has been proven back. There's papers hidden in the MIT library, for example, from the 1940s that show this works.
And then is this something that you offer, and how well does it work?
It is. We have precision profits, of course, which is based on the idea of seasonals. As far as how well it works, we advertise that right up front. When you look at the portfolio, we show the average percentage gain of each and every recommendation, and we show how long they've been open for. Generally, we're getting about 20% gains in less than a month on average, which is a great idea.
20% gains on average per month would be fantastic,
right, exactly.
in any circumstance. So it's just another example of the kind of rigorous sort of mathematical elements that you bring into your trading. So Mike, thank you very much. Thank you for coming in and talking to us a bit.
Thank you, Jeff.
For everybody, Jeff Yastine from Banyan Hill.